Shares of XPO Logistics crashing after reporting weaker than expected earnings and issuing a dire warning about losing one of its largest business customers. Industry analysts believe that customer is likely Amazon. This logistical nightmare comes after FedEx warned of an economic slowdown in early December. These stocks have sunk over the last 6 months. XPO shares down 48%, FedEx down 26%. UPS, which has rallied sharply off the lows, is still down almost 10%. So are these stocks too fragile to touch here, Steve?
So if you think that the market is coming in, if you think that global growth is coming in, then they're too fragile. If you think that Amazon is stealing their lunch, I think that's a misconception. XPO, yes. UPS to a greater extent than FedEx. But I would say that if you want to go in one versus all the others, it would be FedEx to me, less reliant on Amazon.
But the overall take is that global growth stinks, and so therefore you don't want to be in any of them?
Yeah, but I think there's better ways probably to play global growth other than these, because you have that Amazon effect. Sounds like we're talking about Amazon's impacting everybody. But in this particular case, we know that Amazon has their own fleet now. They're starting to take over their own shipping. So there's a little bit of an idiosyncratic risk in buying these. If you want to play global growth, you can buy something like Cat Tractor, which is a big company, or a Boeing or something like that.
Real quick, FedEx made an all-time high in beginning of 2018. We're in February now of 2019. The stock was a $275 stock. And again, sideways to lower ever since. Yes, we have bounced since December from 162 to wherever we are now, $179 or so. But, valuation is compelling. It's been compelling. It's telling a story. Again, the market's going up, that's fine. But when you look under the hood, as they say, I was a mechanic at one point. You remember that. I mean, you put the hood up and you sort of dig
the IROC Z wasn't that complicated.
It just doesn't look that good. My car might be running okay, but you know it's just a matter of time before you blow a gasket.
Okay, well, guys I rock with louvers, curb feelers, tinted windows, and sheepskins. Bottom line is, actually, I own FedEx, and I think it's ridiculously cheap. This is trough valuation. I've said that before. And so different than Steve, I would take the opposite. If Steve said, look, if you think this is global cyclical, it's kind of a problem. If you think it's Amazon, I wouldn't be too worried. I actually think that the reason, guys pointed out this weakness in FedEx, I think some of it has to be somewhat, hey, are their best days over? Because that last mile logistics, which XTO, by the way, is famous for, that's what they do, is under some pressure. So I'm less worried about global cyclical with FedEx because, frankly, their numbers have been fine, albeit with a warning.
Are you more worried about Amazon, though?
Yeah.
So even though Amazon is not, I could see it with UPS, but I couldn't see it with FedEx. FedEx is maybe 5%, 3 to 5% of the revenue is derived from Amazon, whereas UPS is 10%.
Well, I tell you what these guys have indicated is they're not worried at all, and certainly Amazon's news on buying their own fleets and whatnot has been out there for a couple of years.
Right.
But the stock is reacting every single time.
What used to affect FedEx every year about Amazon now affects it every 3 months.